Hi, this is Zam here with the weekend edition of the US Chartbreakers here at Zach's Traders Cafe for Sunday, the 25th of February. Starting off with the S&P, which still makes progress within this rising October trend channel, top of the channel there, 5150. That's what we're looking for near term, i.e. by the end of next month, or hopefully a bit sooner. In terms of the actual ingredients of the rise, we've had a gap down earlier in the month and a gap higher, so it's basically like an island reversal, very strong type of formation, and above 50-50, 51-50 the high, given that 50-50 was the previous high. On the downside, if we break back below 50-50, then the floor of the channel currently at 49.80 would be the destination. Nightmare scenario is that we have to go down to the 50-day line, 48.50, but it doesn't look like we're going to do that so far. Moving along to the Nasdaq 100, and here you can see that the glory of, I suppose, the aftermath of Nvidia has kept the market supported. Got that resistance line projection there from September heading towards 18,500, and that's our near-term target by the end of next month. Again, as in the case of the S&P, the gap down, the gap higher, a strong type of formation. But here we're looking for basically Thursday's support for 17,800 to hold ahead of a potential move to 18,400. Otherwise, we might have to retest the uptrend line there from October, 17,600. Moving on to the stocks, and motley bunch as usual, starting off with AXT, and here you see that massive spike there. The clue in terms of the spike was the way that the 50-day line has been rising basically since the beginning of December, and so that has been an accumulation phase. There's a support line there from back in November, $2.30. And the big breakout here, obviously, through $2.90. The view of this stage is that while we're above resistance on the way down at $3.15, let's call it, we could still retest the top of that rising trend channel base from March as high as £5.10 by the end of next month, giving the shares a bit of time for the dust to settle after the massive unfilled gap to the upside. Maybe a little bit less dramatic, but no less compelling, is the situation at ATN International, where we've had basically a bear trap rebound, rising trend channel base, but then that all that price action between say $33.50 and $28 just there to remove the weak hands. That's good information or good intel for us, because above the $33.50 level, we're looking for the shares to progress to the top of the rising trend channel from back in October at $43 by the end of next month. Tends to be the case that when you have a handbrake type turn, as you got there, then the rebound can be even stronger than the dip, and there was a pretty strong one last week going into the rebound. Stock which has been quite a favorite, or become quite a favorite here at the Chartbreakers, is BitOrigin, and here you can see that the shares managed to hit one of our initial targets here, the top of the rising trend channel from late May, around $6. The view now is that above $6 we could get a new leg to the upside and wider parallel resistance line projection at $10 by the end of next month. Ideally, we stay above the 50-day line, now rising at $4.40, but hopefully we just go straight through and hit that $10 target. Another regular is the next stock, which is appearing once again, Carvana, and here you can see why it's a regular, because we've had this wide rising trend channel there from the summer. We've managed to make generally higher highs and higher lows in the recent past, but the latest price action gapping through $63, the old December resistance. The longer we stay above that, the greater the chance of a move to $100 by the end of April, giving the shares a bit of time there, given that we have gapped up so sharply. The worst case scenario at this stage is that we have to retest the old resistance from earlier this month, around $59, but ideally 61 plus is the support for Carvana. Less frequent in terms of appearing here, but hopefully we will have that kind of action, is Gyre Therapeutics, and here we've got this wide rising trend channel from October. We've broken through the 50-day line at just below $19.60, and above that looking for the shares to progress within a rising trend channel from the late summer as high as $34. In fact, looking for that by the end of next month, and ideally there's no end to close back below the initial February resistance at $18.75. Another reappearance from Infobird, which always looked as though it could be a winner, and so far is trying its best to give the evidence for that particular theory. Here you can see that we've got a wide rising trend channel base, rather a broadening triangle base, and here the initial target here was $5.20. Above 5.20, we're looking for $9 as soon as the end of next month. Ideally, we stay on the right side of those old September-October peaks near the $3.50 area. So quite a punchy call there, but initially $5 there for Infobird. Moving on to the stock of the year, and maybe the stock of the decade, the way things are going, Nvidia. Here it was interesting to see the shares run out of breath a little bit on Friday, but given the handbrake turn that we had for Thursday, for Wednesday, Thursday, you can't forgive the shares. Well, you can forgive the shares for doing that. The old resistance here around 750, and ideally we'd like to stay above that ahead of a move towards the top of that rising trend channel from August, as high as $930. $930 potentially on tap for the end of March, but obviously as we have come a long way in a short time, we might just have to keep an eye on 750 initially and the top of the latest gap before getting too carried away about the upside. Next up is Owlet, and here the shares having another go at heading towards the top of that rising trend channel from the early part of last year. The top of the channel there as high as $8, and we're looking for that by the end of next month, while we will remain above the 50-day moving average at $5.40. So hopefully a relatively simple setup there. It's helped by the way that we managed to push higher off the floor of the channel so strongly with those strong candles on Thursday and Friday. We covered the latest stock before in the recent past, Primech Holdings, and good to see, good to follow through on that. Here we had an unfull gap to the upside after the sideways consolidation above a rising 50-day line, so that did flag the move. But we want to see an end-of-day close through $2.67 and the initial 2024 resistance before assuming we could head up to as high as $4.50 by the end of next month. But the good news here is that as long as we might remain on the right side of $2, it does look as though that rising trend channel from October will work. Another repeat showing in the recent past for Root, and what a chart here that we've got. What's interesting here is that we've managed to have a massive bear trap there over the period of basically over a month there, but actually the shares have now returned to within that rising trend channel from May. A very strong signal indeed. The floor of that channel, $11.30, and above that we're looking for as high as $20.80 over the next 2 to 3 weeks. And as I said, with that bear trap below the floor of the channel, a very strong setup there for Root, and it'll be interesting to see how that pans out. Sleep Number is next. I don't think we've ever looked at this before because it's a name you don't really forget, but we've got a rising trend channel base after a mini bear trap there below the support line there from back in November. The shares going down below the $10 level, but we've now gapped up higher through the 50-day line at $12.50, and while we're above that, we're looking for $20 by the end of next month or even sooner. On to the last two. First one is Unity Software, and here beautiful gap higher as well on Friday. Friday seems to be a good day for many stocks. Rising trend channel base and rising trend channel, in fact, from back in March. Top of that channel, $27, and we're looking for that, especially while we remain above the old April resistance area at $20. If we can get away with no end of day close back below $20, that would be a great achievement for those shares. Finishing off with what looks like the most illiquid stock in the market at the moment. Here we've got Wetouch, and just again, we looked at this earlier in the week. Looks as though we've got a bear trap gap reversal. Shares trying to get back to the top of the gap there at $7, and that's our target, although obviously where the stop loss should be, etc., is rather more difficult. Probably an end of day close below $4, probably the only thing you could do at the moment. That's it for me today. More updates on